while the market is contemplating not the direction of movement, but rather the timing for when to resume the decrease in demand for both major instruments. Interesting information continues to come in from various banks and analysts. I remind you that the market's consensus is currently that the FOMC will begin easing monetary policy in September. No statements suggesting September as the month for the first round of easing have been made by any of the Fed governors. The market has once again created a beautiful fairy tale and is strongly believing in it. Perhaps, if the market looked at things realistically, the US dollar would be much more valuable. Bank of America and its analysts have made a new forecast regarding the timing of the Fed's policy easing. The bank believes that inflation will remain above the target level until 2026, and rate cuts will not begin until December 2024. After that, the Fed will reduce interest rates once a quarter, i.e., every second meeting, until it reaches 3.5 in 2026. The bank also noted that the risks of inflation remaining above the target level are quite high, which will keep the U.S. regulator from cutting the rate repeatedly. Essentially, everything will depend on inflation, as it has before. BofA believes that by December 2024, inflation will decrease to levels that would allow the Fed to conduct at least one round of easing. However, the bank's analysts did not specify to what level the consumer price index could fall by the end of the year. In my opinion, all forecasts regarding the timing of easing or future inflation values have no real basis. I agree with the viewpoint that inflation will decrease, but no one knows at what pace. Those who claim to know have already been wrong about March and June when they said rate cuts would begin in those months in the U.S. I believe that these expectations and forecasts should no longer influence the dollar's exchange rate. We should expect the strengthening of the US dollar to cease only when inflation actually slows to 2.5s, not just on paper. Then we can expect the Fed to shift to a more dovish policy in the next couple of months and discuss possible timing. But not now.